Now here's another one from a couple days ago. In SE, I bought here. Here's the buy and the sell. I bought at 33. I'm sorry, I bought at 32.48 here and sold at 33.10. And again, I had been tightening in the trailing stop as it was getting close to the whole number. In this case, I punched out over it and pulled back down. And I think my exit was, if I were to push the arrow, I think it was right over here. Anyway, that's a pivot. And if you're looking for buying pivots, one thing that I found is especially important is two technical signals. One is to make sure that you've got a double bottom, or if you're looking at a 5-minute candlestick chart, if you see a hammer bullish engulfing, that's fine too. But look for a double bottom, like right here. See, there's a test and a retest of support near 32.15. I bought right there, which is good. And then I sold up here, which is even better. And the reason that was my exit target was it's a whole number, and it's a mean reversion pivot, meaning it dropped sharply. It did a bounce back up to the midpoint, and at that point, I tightened in my trailing stop, locked in my profit, and I was good to go. All right. Hey, before we look at our forecast for this week, I just wanted to quick reminder, I do have on sale through tomorrow only. It's not going to be extended, and it's not going to be repeated, at least not till November or December. So don't wait till the end of the year. Now's a good time to take action. I've got all 4 of my alert services. Webinars, if you can take it 6 days a week with me, Monday through Friday for the live room, plus the Saturday swing scans, plus breakout mastery, plus small cap scans, all for 76.8 and almost 77% off if you take action and order that. So, and you have my word, this is very helpful training. And if I've got a lot of people who have taken me up on this lately, and welcome aboard all of you who ordered this last couple of days. Even if you're currently a member, say on a monthly swing scans or monthly trading open subscription, go ahead and buy this, and then we can cancel out your earlier subscription and credit any remaining weeks or months to the end of this subscription. Because this is a great deal. This is, you do the value stack. 40, if you were to do all the services monthlies, I don't know that you do all of them monthlies, but if you were to do all of them monthly, it'd be $42.96. So it's only $9.97, which is a good deal. I used to charge more than that for 2 days with me live at the MGM Grand, Las Vegas. When I used to do my live day trading seminars, it was $1,500 a day, and traders flew in from around the world for just 2 days with me. This, you get $9.97 for a whole year with me. So, and that's daily, Monday through Friday, plus Saturday. Got so many new members. So anyway, that's trademastery.com/big value. All right, well, welcome aboard. As always, all information is for educational use only. That's me. Yay, with my new monitor set up. Selling the freaking top is always fun. There's nothing, even 20 years later, I can tell you, I've been day trading full-time 20 years now. There's nothing like selling near the exact top, especially like I did so many times repeatedly with an instrument I'm very familiar with trading. I've got an edge. I've got an advantage. I know using tape reading slowdown patterns, the ratio of trades going off at the bid or the ask, block trades, iceberg order flow. I know how to use all that with the 1-minute candlestick chart to get me in and out correctly. Those are the type of things that are really exciting as a trader. As you tighten up the main thing is I don't ever sell at market or buy at market. I use sell stop and buy stop orders. So once it runs up, I tighten up the trailing stop further and further, the further it runs in my favor. And then when it does ultimately fade down, I'm out with a profit near, not at the exact top, because I don't use market orders to exit, but within a nickel or dime of the top. So good stuff. S&P looks healthy, right? We're up at a new high, which is always a good thing. We got a cup and handle breakout in our S&P. That would be yield cup. That would be the handle. We're up at new highs, so it's a long market. If we take a look at our market internals, though, notice please the VIX was up 2% yesterday. So that's a sign of bears coming back to roost a little bit, or bears coming back. So we may see a little bumpy road next week. Be ready for the inverse ETFs, and we'll go over those in a minute, as well as long continuations. From a sector standpoint, banking looks horrible. Gold looks uncertain. Finance looks okay. But insurance is the rock star. So I don't trade insurance stocks, but if I did, this would be the right sector, right? The insurance sector, if you trade, State Farm or AIG or whatever, insurance sector looks great. Semiconductors look really horrible and choppy. And our biotechs also similarly look pretty horrible. So doing a sector roundup, insurance would be rated number 1. And I'd say finance and banking number 2. That's valuable intel, because if you're getting stopped out, let's say you're trading, like lately I have not been trading pot stocks because they've been doing exactly jack squat, right? If we look at our pot stocks, let me ask you a quick question. How many of you guys would like to see me add a pot stock quick coverage to these 20-minute events? Because it is a hot sector, and I'm thinking about, I cover these things in the live room and occasionally in swing scans, but I want to expand the coverage of our cannabis stocks because it's a really hot sector, though not lately. So we can take a look at some of these guys. These are the ones I trade. I trade Canopy, I trade Kronos. My friend Barry up in Canada turned me on to Tilray, and that one is probably the best investment grade long-term. That one and Canopy are my 2 favorite. We've got some small cappers that are beaten up and not doing a whole heck of a lot. One thing to keep an eye on is the MJ ETF. There's an ETF for cannabis and CBD equities. Most of you saying yes, so that's good to know. Hey Ahmed, let's see, AMT for insurance. Let's take a look. I normally don't have time to pull up charts, but for you I'll do that. Let's see, AMT. No, not enough trading range. It's a $200 instrument with only 194 to 220, so it's only got a 26 delta, 26-point range, so nah, I take a pass on that. Because why trade that when I can trade like that instead, right? This is a pick I gave you guys on a silver platter for the last several weeks, so congratulations if anyone listened to me and profitably paper traded. Because these are all for paper trading, right? If you'd actually traded it, you could have made a frickin' fortune. Anyway, bullish engulfing here off the intermediate low. Little bullish shadow there. Increasing. That looks good. That's good. What I don't like is the volume's not up at new highs, but the price action looks good. So that's a first pick for the week ahead. Star. Another one is Ego, one of the small cap gold. I think that's Eldorado Gold. This is one. These are all ones that my small cap scans or swing scans or trading the open members have gotten earlier. I'm giving them to you guys now because they may still have some run time left. Brings up a very important concept that I've been covering daily in the live tradingtheopen.com room for so many subscribers. I'm at like 8-year new high subscriber growth rate in my business because I kick Wall Street's ass. The point is late cycle versus early cycle breakouts. This is a late cycle breakout. It doubled. I mean, it freaking doubled. It went from 3 to 6 a share. So it's doubled in price. That's a late cycle breakout. Most of these are late cycle. This one would be a little earlier cycle because see, it's only been running up the last couple of weeks. ARQL got a bearish candle on Friday. It's not quite an engulfing, but it's still enough I'd be nervous long here. The point is this is an early cycle breakout. This is a late cycle breakout because it's been running further. One of the distinct advantages you can have from being a member at my swing scans and trading the open live room is we identify these things for you and help you develop a trading plan specifically designed to identify entries using the knowledge of if it's a late cycle breakout, we're going to be a little more conservative in our share size and entry trigger trade management. If it's an early cycle breakout, we want to be a little more aggressive. So give some thought to that. If it's only been running up a short amount of time, it looks like it's got a pretty good head of steam it's built up. It's like, hey, wake me if it gets over 1250. This is an early cycle breakout, right? So it hasn't been, it's been an uptrend this whole time, but the excited part of the uptrend is relatively late in cycle. And if you're looking for intraday trades too, you've got instruments that run up nicely. One thing you want to do to evaluate trade worthiness is how far will it run before it stalls, and does it do what you expect it to do? For example, one reason why I trade TVIX every day is I like whole number support and resistance. So I traded it correctly here because 16 was support from back here. Previous high is current support. Previous resistance became current support here. The little window, not quite at support, but it started to get a nice high volume breakout. And that told me that'd be a good play. That's another quick day trader's tip. I cover both day and swing trading for all of you. Let me ask a quick question. How many of you are day traders? I got always a new big audience here, right? We've got monster audience, right? We're 56, 61. Wow. How many of you are day traders? So the reason I ask is I got new people here each week. How many of you are day traders? How many of you are swing traders? How many of you do a little both, like me? Type in the word day, swing, or both if you would. Or if you're lazy, DS or B, or whatever you want. But let me know. Let's hear a shout out. Still mostly both. Saying swing, both, day, both, swing. Hey, thanks, Chris. Day only, swing, both, swing, both, swing, both, swing, both, day, swing trader, just lately, both. I'm kind of reading as these things are. So you get the picture. As a former statistician, I'm just eyeballing the charts. I would say roughly 65% are both, with day trading dominating the balance of, trying to make a pie chart. Over half of you do both day and swing trades, with the majority of the remainder that are one or the other being day traders and the minority only being swing only. So that's interesting. Anyway, so good to hear. Thanks. Because I like to cover both types of charts and both what kind of trades I'm doing in my own trading accounts. And so it's good to hear from you to see what kind of traders you guys are. So thanks. I like Nick's answer, saying any that makes money. That's the quote of the week. Thanks, Nick. I agree. And this really nice guy, Nick, who flew in from New York for one of my seminars in Denver back when I was doing live seminars, which I don't do anymore because I don't feel like it. I can reach more people sitting here instead of standing up in the conference room, but I miss seeing people in person. Next money show. I don't have plans to do any money show events in the near term. I'm too busy. And I also have like health issues. It's hard for me to travel and walk around as much as I used to, so I'm at home. Anyway, the point is whole number support and resistance is one thing you want to pay attention to. When you're swing trading, look for charts that give you an edge, charts that are most likely to keep going up, whether they're early cycle, like ARQL, late cycle, like this guy that's been running a while, or Eldorado, medium, let's call it medium cycle, or IOVA, which is kind of a late cycle. Basically, the maturity of the trend, the directional volatility should be assumed it'll continue until it doesn't. Think back to some of my top picks earlier, like NVIDIA and Square, right? Those ran for us for month after month after month. And Disney a few years ago, right? They ran up forever, like NVIDIA, without any slowdown. So as long as buyers continue in, we continue in with the trade. The strategy is to make sure that you use different share size or different position size based on the maturity of the trend strength. And I teach how to do that in my services. So what else do we got? Hey Chris, an example when it doesn't. The main thing, hey Mukesh, well that's what swing trading's for. That's a good thing. You can day or swing trade. A good hybrid approach if you don't want to. I mean, I still love day trading like it's a video game and sniper, even 20 years later. But I realize that's not for everybody. You can always do intraday swing trading, which is a nice hybrid approach that I also cover in Trading Open. Is, you buy something early in the day during the first half hour, 45 minutes, sometime before 10:15, get the trade on, put a stop under the day's low, and then come back around 3 o'clock in the afternoon and see where it's going from there. And either you got stopped out or you're in the money, right? So it makes it really easy, and you're still intraday trading. And that's also a good strategy for those of you who don't have a 25K account. If you want to do just your 3 trades in a 5-day round trip, learning how to do intraday swing trading can really help you take advantage of breakouts that are running sharply and still keep a good trade management approach in place. So, what else do we have? I think that's about it. We've got a few charts here. Let's do our ETF quick look. I'm going to cover more on this for my Swing Scans members, but just briefly, one thing. I'm starting to put on small pilot trades, just 20 shares, 40 shares in TVIX. I think I'm 40 deep in TVIX from 15.5. And I'll be doubling down sequentially, kind of a reverse martingale, right? Again, if you want to get specific picks on how to trade recoveries in these guys, I don't know about y'all, but I think there might be some money in trading the VIX ETNs like TVIX, like I've traded for so many years. And it had been 82 a share. Now it lost the 52-week low last week. It may keep dropping down to 5 or 6 a share. We don't know where the bottom is. There's a bottomless pit here. It's only lost like 98% of its value, but if it bounces, it may be good for something. Just like Dust, it's another potential oversold. I like that one actually better than the TVIX because it got cut in half in such a short amount of time, and somebody was loading the boat up. It looks to be the exact bottom they put in at just around 10.5, 11 a share. Let me ask a quick question. What do you guys think on charts like this? They're highly speculative and dangerous, but the payoff can be enormous if they come back to life. What do you guys think? Would that be a trade or a no trade? I don't have supermodels anymore with briefcases and all that, but trade or no trade? Do you win or are you going to suck? Are you going to win or do you suck? Do you win? Do you suck? Do you win? Do you suck? A little humor there. Anyway, what do you guys think? I'd love to hear your take on this. I'm starting to put in little tiny niblet trades, knowing that they full well that they may go against me, but TVIX freaking looks oversold. UGAZ, absolutely positively, looks oversold. And Dust looks oversold. Now, I hate the phrase oversold, so I shouldn't use it, but it looks like it's gone down so far that short covering, the short squeeze may come in on some of these as well as a potential bounce. So I'm going to cover how to trade these for my Swing Scans members coming up in just around 10 minutes. So if you're a Swing Scans member, stay tuned for our presentation coming up where we'll be covering those and more. But do I ever short TVIX? No. Is Dust better than Nugget? Well, they're opposite. So if you saw my Stocks and Commodities article on looking at trading ETF arbitrage, I'll often day trade. I'll put on trades in both Dust and Nuggets. I traded Nuggets successfully on the way up, by the way. I got a piece of the bouncer, but I sold way the heck too early. I think I sold, it's like I bought here and sold there, something like that. I should have been more patient, done my intraday swing thing, right? And I could have doubled the profit, but I thought, hey, on a broken down, and it's already kind of extended to the upside lately, the last few weeks, the Nuggets, so I played the long bounce successfully here, but I sold too soon. Story of my life as a trader. I often sell too soon. And Dust did a nice breakout as well. It ran all the way up to 1230. So they go opposite. So I'll often trade, if I trade the initial open range breakout and the other, I'll trade the subsequent pivot like I did a Nugget yesterday. Anyway, they trade opposite to each other, and there's an edge to be had there. And that's my call to action for the trading industry that I hopefully made really clear in my article in this month's issue of Stocks and Commodities is I'd really love to see everybody's take on how to leverage inverse ETFs, especially the 2 and 3x ones, but the opposing long and short ETFs and ETNs can be traded against each other, right? So, see, I'm not comfortable in buying Nugget for a swing trade unless it breaks 30 later, but until then, I'm more keen on a bounce in Dust because I think there's more profit potential if it comes back to life. It had been 50 a share, now it's 12. Just saying, if it bounces to 18, I'll be happy camper because I'll be scaling up on a reverse martingale. I'm either just like 20, 30, 40 shares. I'll double down and double down again and double down again. Maybe 600, 800 shares by the time it exhausts out. Sell it all, stick a fork in it, we're done. All right, I got to wrap. Thanks, everyone. Yeah, thanks, Trader saying thanks. I'll search for the article in tabs. Hey, Paley, what if you combine swing and day from 10 to 10:30 on Saturday morning? That's a good idea. Well, thanks, Glenn, saying I just signed up for the annual. Looking forward to learn the next ins and outs of day trading. Yeah, welcome aboard, man. Yeah, there's so much to learn. There's 20 years of experience and tens of thousands of real money trades. If I can shorten your learning curve and save you a lot of money, potentially on the right kind of charts to trade, that'll be well done. And the neat thing is, it's all, from the convenience and privacy of your own home. You don't have to come out to live seminar. So, folks, do remember to register for the Big Value Special. I'm not going to repeat it. It's definitely, I won't extend it. You'll see the classic, congratulations to all the traders who ordered. Don't contact me if you're late kind of thing. So I never extend deadlines. So tomorrow's it. Best deal I've ever offered in the history of my company. TradeMastery.com/big value/. And there's a link on the front of the Trade Mastery site there too. Do register this weekend, and I'll see you guys for the whole upcoming year ahead with 6 webinars a week, plus all the other bonuses that you get. So anyway, I'm out of here. You guys take care. I hope that you trade successfully and you figure out the difference between charts like this one I gave my members last week. And these are all picks from my subscriber services from a week or two ago, and they're all doing well, right? Echo or Eldorado Gold, Star. We'll provide more coverage for things like the inverse ETFs if and when they decide they want to bounce. Straight directional volatility breakout plays and instruments like TQQQ, and whatever's running, right? Whatever makes sense to trade. So anyways, I hope that y'all do well, and I will see you in our next broadcast a week from today.